Welcome to the special edition podcast. I'm here collaborating with one of my colleagues in the office, Steve Goulet, as a special guest, and I wanted to share his thoughts on 3 stocks we're going to focus on. So welcome to Let's Talk Stocks. Before we begin, we just want to say that the 3 stocks we're recommending is by no way the opinion of National Bank Financial. It is our sole opinion, and that if you do invest in these stocks, please be advised the responsibility lies with the investor. So let's discuss our first stock pick. By the way, our clients hold these positions. I believe, Steve, your clients hold these 3 stocks we're going to be discussing as well.
Equally.
And I personally own them, so just to let you know that I eat my own cooking.
I was thinking the same words.
Okay. So the first stock that we find has a great track record and a great future is Microsoft. So give me your points of view on Microsoft.
This is an example of a stock which has run up significantly. So it has made money for our clients. Now, for example, a new client that comes on board, do you still buy it? Does it look too expensive? Because it could look too expensive. But Microsoft is so present in the enterprise world, the Office software, Outlook, and the operating system. A company can't really go without. So they recently put it through a price increase on much of that suite.
Yeah, the Office 365.
Exactly, and I haven't heard any backlash. Nobody's in the streets complaining.
Because people need the product.
Exactly.
It's somewhat of a monopolistic type of business if you think about it. I mean, it's all over the place. Everyone's got some Microsoft software somehow. Teams, this is a platform we tend to use more and more. It's part of the digitization of the economy.
Just give a little profile for people who don't realize other stuff Microsoft does, which is cloud, basically the backbone to the cloud for enterprise as well. Everybody is going remote, and everybody needs the cloud. You can't have a server, and it's riskier and more costly to maintain your own server, so everybody's using the cloud. To do that, you need somebody in the background. So there are a few large players, and guess what? Microsoft is one of them. So it's called Azure, and it's doing very well, very good profitability. Teams video conferencing, which has become a needed,
the norm,
and essential.
Yeah,
I'm actually recording on Teams right now, which
the government's using Teams.
Basically,
schools are using Teams. Many corporations are using Teams. It's becoming a product that we can't live without, especially working from remotely. Pretty much.
You add on LinkedIn, which is networking, basically business networking, and like the corporate version of Facebook, smaller because there's less volume, Xbox and others. So they're leaders in most of the fields that they touch, and they're doing well.
So the question lies, are they going to be here in the next 5 years? Are they going to grow in the next 5 years? And I believe they're going to grow significantly in the next 5 years. This is what we call a secular trend that's continuing.
Now, to answer that question, the one point that you brought up that I found good is that the change in management 10 years ago or 20 years ago versus today.
Precisely.
Because for 10 years, Microsoft stock was a laggard. It went nowhere.
Right.
But its profitability kept on growing, notwithstanding the leadership that may have been less impressive.
That was the time where we had Steve Ballmer, the CEO of Microsoft, up until about...
I thought we were not going to name names.
He's the CEO. He's now, I believe he owns the LA Clippers NBA team. But incidentally, he hasn't sold a single stock in Microsoft since he left, which is very interesting.
Confidence in the new leadership, which is Satya Nadella, which has a more of a strategic approach, maybe less of a gunslinger approach, and everything he does seems to be liked by the market, which brings the stock to reflect the underlying profitability of that company. So there's a difference between stock and company. Stock includes the valuation, the stock price valuation. And that's where you have a company that has grown at 20% a year. So its profitability, even if it's a very large company, has increased 20% per year, more or less.
Which is tremendous for a company that size.
It's incredible.
It's fantastic.
And looking forward, let's say we tone that down and we go for, expect 15% a year, which is double what the average company does, more than double. And it's trading a little bit more expensive than the average company. So that's where the balance between price value, profitability comes in. And for a leader like Microsoft that has a lower or higher probability of success, you're willing to pay a little bit more. And you'll likely have some positive surprises.
So let's just wrap up quickly on Microsoft. Satya Nadella took the reins. He comes from the cloud division of Microsoft. Yeah. And let's face it, the cloud is a huge business. I mean, it's growing by leaps and bounds. We don't use mainframes anymore, which is one of the reasons why IBM has completely faltered, because they were a mainframe company and they didn't see the trends. The trend is going towards the cloud. And so Satya Nadella came into the picture. He comes from the cloud background. He knew how to execute back then, and he's had a flawless execution. He's the one who initiated the purchase of LinkedIn, which has become also a fantastic social network that is just simply growing. Even though he paid a hefty price for it, he saw the trend, and it paid off. In addition to that, he turned Office 365 into a subscription model, where you don't just buy the software like you used to in the past and you would own it permanently. You now have to pay on an annual basis to continue having the software. So it's a recurring theme, a recurring income, and I just feel that I'm glad you feel the same way, that Microsoft has great potential going forward, especially with the digitization of our economy. Let's move on to the next.
Next company is Visa, which we equally hold for our clients for a little while now, and we all have it. We all have it in our pockets or something equivalent. There might be MasterCard, Visa, but likely everybody has one of the two, and it's everywhere. So with this type of financial company. Tell us your thoughts on Visa.
Well, Visa, it's a staple, pretty much, not just locally, but internationally. All over the world, you either hold a Visa card or a MasterCard. I consider Visa as part of the financial technology of the future. They're participating in that avenue. They are the rails on train tracks. Meaning Visa and MasterCard, each one has a rail. They're both significant businesses, and every single bank has either one of the cards that's being offered. If you even go to a fintech type company like Square or PayPal, there's Visa and MasterCard behind it, one way or another. And now with the e-payment processing system, let's face it, since the pandemic, people don't want to touch cash. They want to avoid it as much as possible.
So it's a little bit like CP Rail, CN Rail. Even if you're a trucker or you're shipping by truck, your container might end up on one of their rails. As we see. Pretty much.
The banks, Square, PayPal, Nuvei, another company that's involved in the e-payment processing system, cannot operate without MasterCard and Visa. So they are the trains, and MasterCard and Visa are the rails, which is paramount for them.
You're talking about these newcomers because you're talking about PayPal, Square, and other companies. The technology allows a lot of companies to start up in this and offer something new. But how does that take away from Visa and or MasterCard?
Well, I really don't see them taking market share away from Visa and MasterCard. On the contrary, I see them complementing Visa and MasterCard more and more. In addition to the fact that Visa, about 8% of its revenues is based on travel. Okay, and we all know because of COVID-19, travel is down significantly. And so not only does it have a future in the payment processing domain in complement with these other newcomers that are coming in, but they also will benefit from the reopening trade when people start to travel again. So I consider, like I said, Visa and MasterCard the infrastructure, the piping to these fintech companies. And without the piping and the infrastructure, they're going to have a hard time operating and being profitable. Sure, they will succeed in their own way, but I believe that you do require these credit card companies, or they're actually going to the debit side as well. They're fundamental to the future growth, and I see fantastic secular growth. If you consider Visa is trading at about 30 to 32 times next year's profits, 2022, a company that's growing its profits at 20% a year, it's a very reasonable multiple for a business that has, again, monopolistic type of environment.
And to return to the example of Microsoft, growth significantly above average company.
Absolutely, for a company that size.
And pricing slightly above the average.
Correct.
So
Correct.
a good trade-off is which is what we're always looking for. An excellent company will have a healthy price, but nothing to make you sick.
Precisely. Let's move on to the next. General Motors. Interesting.
Yes.
Tell me what you feel about GM.
Well, that's a less expected. So for those who've been following me, will know that I tend to dislike capital-intensive and highly competitive business, such as the automotive automakers and the airline manufacturers, because they have to put up a lot of money, borrow, and take 2-3 years to deliver, or they have to change their models every 3-4 years, and it's a very costly business. And there are other businesses that are easier. But GM, after discussion with you, which is an example, right, of a source where we get some ideas, is a company that has changed over the last few years and is making the right capital decisions, and that's what I like.
But GM is an automobile company, which is always known past as a very boring type of business. It's been around for a very, very, very long time. And let's face it, Tesla has shaken the automobile industry. I mean, it just completely swiped the rug off of under their feet. And so GM, I believe from my research and talking with you, that GM is the second most advanced company when it comes to the EV sector, the electric vehicle sector. Even though their combustion, I mean, their combustion engine is still a significant part of their business, and they went bankrupt, let's face it, back in 2008, 2009. They brought in a new CEO, Mary Barra, who's been proven to be very competent. She's turned the ship around, and now GM is one of the most one of the strongest automobile companies in terms of balance sheet around.
And focused strategy
Very
for the
focused.
first time in decades, I would say.
Right. So their mission is to have a lineup that's all electric vehicles by 2035, which goes hand in hand with a lot of countries and governments around the world. Even though they had a very bad experience lately with the Chevy Bolt, there's a big recall. Apparently they're burning up, but they've developed a new battery that nobody talks about. It's called the Ultium Battery, which is a battery that's going to be adaptable to many different models. And they're starting to sell their first main model with the Ultium Battery, the Hummer, which is coming out in the next few months. And apparently the Hummer is going to be a car that's going to be able to do 1,000 kilometers per charge. Now let's face it, many people like big cars. I don't know if you looked on the street, but there's tons of pickup trucks on the street. They're taking up a lot of room. I personally don't like that, but they're taking up a lot of room, and it's like the roads aren't large enough.
And a lot of carbon emissions.
A lot of carbon emissions.
Now it's the best of both worlds that GM is delivering for us. So great.
Yeah, let's hope that they're on time. They have a lot of orders, apparently. They don't want to reveal how many, but there are a lot of orders from the chatter I've been hearing. And early next year, they're coming out with a Cadillac Lyric, which is going to be all-electric luxury car, followed by at least 20 or 30 cars by 2025. They're going to be all-electric. With this new technology, the Ultium Battery technology. Now, I'm not an engineer. I don't pretend to be one. But from what I've been gathering, what I've been reading, and the people I've been talking to, it's going to be very competitive with Tesla, which is the most advanced
battery
electric vehicle company.
Yes.
However, like you said earlier, Tesla is trading at a valuation that is really at nosebleed level. It's extremely dangerous to own it. Not to say that I will never own it, but for now, I'd rather buy a General Motors stock, which is trading at something like 7-8 times earnings. And if you factor the next year, they're projected to make about, let's say, $7 a share next year, and you give a 10 multiple, which is very low in the industry, a 10 multiple, you're looking at a $70 stock, which is currently trading under $50 as we speak today. What are your thoughts?
Well, that's exactly it. You have if we go back to relative valuation we've been talking about, it's trading at half the price of the average company, and it's going to deliver what we think is above average growth. So that's, once again, we're working on the other side, is a company that's underestimated.
Right.
The analysts have earnings, which we can trust to a certain extent, investment analysts. And if you apply a very conservative multiple to that, it's a nice story. So the surprises could be to the upside, which is what we both like.
Absolutely. So, I mean, in sum, you're looking at an industry secular theme where electric vehicles are becoming more and more part of our lives, our daily lives. Every year there are more and more electric cars on the road. You look at the fact that you got Mary Barra running the company, a very competent CEO and a strong balance sheet with an infrastructure that's already in place. I mean, Tesla is still building its infrastructure. It takes years to build a very, international infrastructure. They're doing it fast, but the infrastructure that GM holds right now is phenomenal. They have a very large infrastructure. So put all that together, and I personally see a great growth opportunity going forward the next 2, 3, 5, even 10 years.
At one point, I'd like to add, because I have a feeling if I were watching this video, I'd say, hey, wait a minute now. You mentioned batteries catching on fire?
Yeah. You have to call a spade a spade. I mean, it's not
that
good.
Will happen. That's one reason why you might diversify a portfolio. One key there is, are they prepared for the next phase? Like, do they have an answer to it? They already have, because they have developed a technology that works better. So knowing that it's not an ideal having your cars burn up in people's garages, they're recommending you park outside your garage. Yeah. That's never good, but it will happen with good companies, and that's the way you get a company that's valued half of what the market is, because people expect these things from. So it didn't really.
It actually offers a buying opportunity if they get it right. There lies the risk, though. If they get it wrong, then, well, there's the risk in owning a stock that could drop in value over time.
That's why we look at these things every day.
But something people, the public, or the news media never discusses. There are more combustion engine fires daily out there, by far, than electric vehicle fires. But nobody talks about that.
On the road when you're behind the steering wheel.
Yeah, because that doesn't sell. The media won't sell. I mean, let's face it. So what sells?
It's not news.
It's not news. And it's boring news. And people, but when they hear an electric car blowing up in someone's garage, that makes news. That makes the headlines, especially when it's an electric car. So the bottom line is there's a trend evolving for all three stocks. Just to revise, the Microsoft trend, that's the digitization of the world economy, Visa, the payment processing system, and the electric vehicle industry. These are secular trends. They're very important, with three companies that have strong balance sheets, great management, And I often say it's the management that makes the company. It's not the company that makes the management. And so I'm a believer in these stocks. Would you like to elaborate a little more on that?
Well, yes, and you see here some diversification between three different industries, although they all have a technology underlying secular trend. I'm doing a little recap from the beginning. Each one has a use of technology for their industry that's pushing them forward. Microsoft directly so, Visa through having the technology in the background, and GM through the battery and innovation forced by Tesla. We see that there's a combination of sources also of ideas.
Right.
Some of them come through quantitative, the numbers tell us, and then we confirm with qualitative information.
That's exactly why investing is not just a science. It's truly an art and science when you invest. Nothing is sure proof. You can have the best balance sheet, you can have the best management, but then there's an outlier event that comes into play, and all your ideas, all your planning just went down the drain. I just want, in closing remarks, I just want to say that please, I'm not suggesting that you should put all your money in these three companies by any measure of the imagination. I am not suggesting that whatsoever. But having exposure to these companies within the context of a portfolio that manages the risk and the asset allocation makes very good sense. And this is where asset allocation makes all the difference in portfolio management.
Well,
what do you think?
Indeed, we talked about three stocks. If we were here talking about the 30 that we hold, I think we would lose some viewers. So hopefully you stayed on with us, you found it interesting. But just to add specifically, is like everybody, or most everybody, needs some bonds to balance out the volatility of the stocks. Even if they're the best investments, I do believe high investment in equities is a good thing, but you have to be able to sleep at night. And that's the biggest and the hardest and most challenging but most rewarding part of our work, is actually making sure that all the finance makes sense, but it balances out with a human being on the other side. Because if the best strategy is done too aggressively or too intensely, anything too intense, it's like salt in your diet. If you put too much, at some point, too much of a good thing makes you sick.
That's why, I mean, you're right. I find bonds are the foundation to every portfolio. Like a house is built on a solid foundation. And so when there's a storm, guess what stays up? The foundation. But in addition to bonds and stocks, I like alternative assets, like precious metals. Make perfect sense as a great diversifier within any portfolio, as long as it's in the proper percentage. You just don't want to just throw things together at random. You want to really calculate the proper percentages that belong in a portfolio, whether it be growth, balanced, or conservative. And from that point forward, you'll do well. You'll do well long term. And I just want to say a great thank you to Steve Goulet for joining me on this webcast. Steve and I are going to collaborate more and more in the future. And I just want to say thank you. I appreciate your time and looking forward to doing it again.
And I'd like to close with thank you to my colleague Karim. As you can see, I have lots of respect for Karim. I've known him for
15 years?
I was going to say decades. We're not there yet. And the conversations are always good and honest, and that's what it's all about. And I hope you enjoyed, and thank you, Karim.
My pleasure. Thank you all for listening. I hope to see you soon. Bye.